can go ahead and get started. We've got a few people starting to file in. Thank you, those of you who've already signed on, for joining us today. We are super, super excited to start this program. It's something on the Busy Sites end that we've been wanting to do for a while. I know we have people who are Busy Sites clients joining us today, and also people who are part of the First Financial Bank community joining as well. So we've got people from both teams to answer questions that might come up on either side of things. But this is the first installment of something we've been wanting to do for, as I mentioned, many months or years even, called our Partner University program. We plan to have quarterly our best of breed partners, starting with First Financial Bank, joining us to give educational talks to our clients and their clients as well, on a wide array of topics for the veterinary industry and small business owners in general. So today, as mentioned, we're kicking off this program with First Financial Bank, and specifically Ashlee Moore, who's here. She is a veterinary practice lender at First Financial Bank with over a decade of experience helping startups, small businesses, and vet practices nationwide. She is absolutely the perfect person to be speaking on this topic of practice growth today. Even before joining the First Financial Bank team, she worked with small businesses as the creator of expansion strategies for companies and really helped to achieve exponential growth there. So today, whether you are looking to purchase your first practice, maybe add another practice to your group, expand your practice, remodel your practice, whatever that growth is you're looking to do, she has some very valuable insights for you today. We're going to talk about acquisition, expansion. She's got some great financial models, lots of practical tips for what to keep in mind when you are looking at really any type of loan for your business. We also have the Q&A open, so please feel free to send in questions as she's presenting. Amber, who is on the First Financial team as well, Danny, who is on the Busy Sites team, and myself, Cassandra, will all be watching that Q&A section. We'll ask some of the questions live. We may hold some of them till the end as well, where we'll have some time set aside for Q&A. So please feel free to send them in. We're watching them. We're here to answer questions, and Ashlee is happy to provide more insight on any questions that y'all do have. So without further ado, I will turn it away to you, Ashlee.
Thank you very much. I'm excited to be here and kick this off and share some of this information with you, and hopefully answer some questions on ownership or expansion, or whatever your goals might be. All right, so give me 1 second here. Let me stop this to make sure that goes smoothly. All right, so today what we're going to be talking about, what's going on in the industry right now. What does it look like for practice owners or somebody that's looking to expand their business? What are some of the recent changes, and really what is the appetite out there for lenders? What's going on that would make them want to either invest in a growing veterinary clinic or just in the industry in general? What you specifically will need to buy or start a hospital or pet resort. What some of the challenges you may see, or what some of the fears that might be affecting people, what might be holding them back. The do's and don'ts of an acquisition, whether that be acquiring an additional location to expand on your business, or starting your first acquisition. What are some things that you should be looking for? What are some things you should have prepared? And what are some things that you should steer clear from? What are red flags? We're going to talk about resources that are available to you, whether that be through the bank or through government programs, whatever the case is. Some of those resources that can make it a little bit easier, and some best practices when going through this process. And also the anatomy of a loan. What does that look like from start to finish? And we're going to kind of break it down and take it step by step, and answer questions along the way. All right, so what is going on in the vet world? Something that's really interesting when we're looking at average compensation across the country. So obviously that can vary greatly from level of experience of a DVM to what area of the country, how large the practice is, full-time, part-time. But if you're looking at an average full-time salary, it's around 90,000. When you take ownership into account, that jumps up to over 380,000. So there is a pretty big gap, pretty big multiplier when it comes to what you can expect working for somebody else rather than owning your own practice. One thing that we're hearing from owners that's one of their biggest challenges right now is actually staffing and getting new DVMs and associate DVMs to join their teams. What's interesting is one thing that we are seeing in upcoming years is that this area is going to start growing. Growth has slowed a little bit, and from what we've heard, it's been a little bit, the emotional impact has grown and things like that. But as the climate starts to shift, we're expecting that to change as well. So that big challenge that owners have been experiencing, hopefully that will start to course correct itself. One of the most interesting things is the top new services. So some high-end services have been starting to pop up and have been being asked for by clients across the country, including acupuncture, laser therapy, ultrasound, just some of those additional resources that go above and beyond the normal therapies that you would see in a vet clinic. Even behavioral counseling, so training and things like that. A lot more people are starting to adopt and rescue pets, which is fantastic. But with that comes the need for these additional services. And how have things changed? So we're going to talk about the elephant in the room a little bit, this COVID-19 pandemic that we have seen. And what's interesting with the pet industry as a whole, pet care as a whole, including veterinary, is that it has seen some amazing bounce back and resiliency and being able to adapt to some of these changes that we've seen through this pandemic. Market growth has been consistently over 7% year over year. And that is, all indications expected to continue. Pet adoption rates, as mentioned, have increased. And that's, with that, this generation is treating their pets more like family than ever before. These newer generations, they see their pets as their babies. I've seen some interesting statistics where millennials and younger are making home purchasing decisions based off of their pets and not their families. And another one that I found interesting was that a lot of people spent more money on their pets during quarantine than alcohol, which, I've had a lot of people challenge me on that one and say, not in my household, but I think in mine that rings true. I think my dogs got treated a lot better than most. So just some interesting statistics to show that people are willing to spend money on pets and this industry is growing, and having those additional services in your practice can really be a differentiator. So having innovation. One thing that really has popped up during this pandemic is the need for telehealth and even mobile veterinary clinics. So is DVMs, I'm sure in previous years, you would have televisits, or clients would send you photos and things and ask what this is, and you're not getting paid for that time. You're spending time on it, but you're not getting paid for it. With this pandemic and people staying home and being more used to that on-demand mentality, it's turning into an additional revenue source for a lot of veterinarians, where they can set up teleconferences or a Zoom session, just like we're doing now with their clients, and it's becoming an additional revenue stream. But it's also becoming something that clients expect and want to have available. So just innovation like that and having those additional resources for your clients are definitely ways that people have been able to differentiate their practice from others. So when it comes to ownership, the number one fear that we see associates make, or number one mistake, that we see associates make is fear. And that's believing that the fear they're not ready for ownership. believing that, oh, it's not the right time for me. I need to have X amount of years of experience, or, it's not the right time for me. I have so much student debt. The truth is, you're never going to feel ready. It is a huge life-changing decision, but can have such an impact for your future that, if you're ready to, if you feel the urge to take the jump, there's, you're never going to feel completely ready, but now could be the right time. When it comes to that student debt, we never want to penalize anybody for getting an education. You had to go to veterinary school to be in the position that you are right now, of course. So when we look at somebody's debt, we're looking more at other pieces, the credit card debt, the overall other parts of that pie. Obviously, with your student loans and things of that nature, they need to be in good standing, and you need to have some sort of plan in place in order to pay them back. But that overall debt there, we understand that it was necessary for you to get to where you are now, and we definitely look at the bigger picture as a whole versus that. So do not ever think that that will hold you back from ownership. And one of the biggest changes that we've heard from our veterinarians that they wish that they could make is actually expanding or remodeling or adding to their current practice. So it's never, hardly ever, that they wish they had not done it. They wish that they had actually gone bigger. So keep that in the back of your mind, that this is definitely a great space to be in. And a lot of the people who have owned, their biggest change that they wish they could make is to expand on that business. So some keys to practice ownership when you're looking to either purchase your first practice or purchase an additional practice: buy at the right price. This one's very hard, not to get emotional about. As I'm sure a lot of people are aware, the corporate market has been big in the vet space in recent years. A lot of corporations are coming in and buying out practices, all across the country. And with their deep pockets, they will outbid you. That becomes a problem when it makes it cash flow issues, and you can't outbid them. And it's really hard not to get emotional when that comes to. But we see it time and time and again, and that is definitely the number one thing. If the price gets too high, there will be another practice out there for you. So do not get too attached and put all your emotions into the one that you're looking at right now. Another one will come along. Veterinary medicine is a people business, so that smooth transition from the previous owner to you is imperative for client retention. And you want to retain those clients because it'll help with that cash flow when you first start the business. And obviously you can build on that, and it really helps with the overall health when you're taking over. So whether that be the current owner stays on for a couple of months, and the SBA actually allows up to a year for the current owners to stay on, whether that be them stay on, or you guys have a transition plan in place where you keep some of the staff, whatever that case may be, it's definitely important that you have that smooth transition. The clients see a seamless change of ownership. Finding the right team is so important when it comes to your business. You want to make sure that you have people in place that will maintain the level of care and service that you want to provide to your clients. So, you want to be able to essentially disappear, and that level of service will not change. So those are the type of people you want. And I mean, this quote says it all: train employees so that they could leave, create a work environment so that they do not want to. So you want to have, an awesome work environment for your employees, and make sure that you're training them to be the best associates or vet techs or whatever the case is in the industry. And lastly, systems. So it's very important that you have, ways of operating that can be replicated, that you can teach to, new staff, or that, you can look at a system and see where, broken pieces might be that you can quickly fix. This will help with, saving time, resources, and making sure that you're operating as efficiently as you possibly can, which in the long term will help with your cash flow and making sure that you're not, wasting time, money, and energy where you don't have to. All right. So looking at the process start to finish, one thing that's very interesting, once you get to phase 6 here, so you actually receive the approval letter for financing from phase 6 on, this can take about 60 to 75 days. Now, we like to say that we can, make the process as quick as possible with lending, and that it's not, necessarily a quick process. You're still looking at a couple of months, but we definitely like to make that as short and painless as we possibly can. But from phase 1 to phase 6, this can take anywhere from several months to several years. So finding the right practice for you and, doing all your site visits and negotiating and actually getting to the point where you want to make an offer on the practice, depending on your area and what's available, that can take years. So, and I say that so that you don't get discouraged if you are looking for, your first practice, or you're looking for an additional practice to expand into. This can be a long process, but it's imperative, for you to find the right one. And that's what's most important. It's not just, finding a practice that could work, it's finding the perfect one for you. And that's why I say, those steps in this process can take a long time, but it's definitely worth it in the end. So looks simple, right? Everything with lending, I know, we go back to those fears. And one of the things that we hear fairly often is that I just don't even know where to start. This is confusing. I don't know what to do. It's so much easier for me just to stay in the position that I am in right now. And I care about treating the animals, and I that's what I want to do. Well, you're the expert there. You're the expert in caring for your patients, and hopefully eventually you're an expert in ownership, but you're not expected to be an expert in everything else. And that's why it's important to create a good team that knows the veterinary industry, is able to back you up, able to point you in the right direction, and really take that pressure off of you so that you can focus on the important things. Again, your patients and owning your practice. So first and foremost, a banker that knows the veterinary business. For example, us at First Financial Bank, we have our division that is solely dedicated to the veterinary and pet care space. So Swanda and myself, we work solely with veterinarians, and we know inside and out what some of the nuances and differences are of that business, so we can help you steer in the right direction there. Having a veterinary practice consultant can help, especially if you're starting your first veterinary clinic, doing a startup. They can help you with some of those projections and things that you need to know to make your practice successful. And then having a good accountant and a good lawyer. Again, we don't know all the ins and outs of the laws that go along with owning a practice, but a lawyer who's been in this industry will. So they can help steer you in the right direction there. And this can really help build the path to success for ownership for you. So when looking at a practice, what is that practice worth? And it seems pretty easy, the price the seller is willing to accept and what a buyer is willing to pay. But there is a lot more that goes into it. And you want to make sure that business that you're looking to acquire can cash flow. And what that just means is you're bringing in more cash than what your debts need you to pay. So you want to make sure that you're able to pay yourself. Are you able to earn market compensation? Us as lenders, we like to see a debt service margin of 1.3 or better, which just means that you have extra ability to pay back the debt of taking on purchasing this practice. So you want to be able to generate a return on your investment, essentially. And the way we figure that out is doing a business valuation to see, what the cash flow is and the overall health of the business. So when performing a valuation on a business, what is it that we need? So first and foremost, we need year-to-date profit and loss statements and balance sheets for the current business, 3 years of tax returns. So that is on the business as well as personal tax returns. And then practice transaction report. So this is just, how much production per veterinarian is coming in. What are the average new clients per month? What are the cost of goods and inventory sales and things of that nature? So really, what is the total all revenue that is coming into the business? These things help to see the overall health financially of that practice that you're looking to purchase, and can help, you decide as a buyer, is this worth it for me? Am I going to get enough return here? Is it worth it for me to buy it? And also, will a lender give me money for this? If, it's not, they don't have really great financials, and, we need that positive cash flow in order to lend out. That's not to say that there isn't potential, and we can work with you on that, but typically that 1.3 debt service margin is what we like to see. So some practice valuation formulas that are used, typically it's a multiple of cash flow, or EBITDA. If you're not familiar with what EBITDA is, that's earnings before interest, taxes, depreciation. So some of those variable things that can go into a business. Now, we use this because those other pieces, like interest and taxes and whatnot, can vary based off of the industry that you're in. So those earnings are so critical to show, how much you really are bringing into the business. And then we can take, the industry specific stuff into account after that. But the market right now is averaging 2.5 to 5 times of EBITDA. And, the corporate purchases have inflated this because they can outbid to the point that the business is not profitable and it does not cash flow. And again, you don't want to get into an emotional place when this happens. I can tell you that in recent years, it seems that a lot of current owners are placing more importance on knowing the person who's buying and going to be running their practice than getting some extra dollars. So it's been an interesting shift, and we've seen some people who say, I will not sell to a corporation. I will, I want a private buyer. And, it definitely, and that's not to say that the level of care that a corporation can bring isn't great, but it just seems that these owners are very much interested in making sure that somebody who has places the same value in that patient care and their clients takes over their practice. So we are seeing a little bit of a shift in the market as a whole, but yeah, should you have to go up against a corporation for one of these practices, definitely don't get emotional, don't get discouraged. Another one will come along. As mentioned before, it can take years to find that perfect practice, but you will find it, and don't let this stand in your way. So an example of a veterinary practice acquisition, if you look here, gross income from 3 doctors, say $1.5 million. You can see all the expenses and things like that totaling $1.275 million. So right there, the profit is $225,000 just based off of this basic breakdown. Now, if you're looking at this based off of cash flow, purchase price, if the net profit is 225,000 times 5, 1.125 million. Now, if you look at the total amount of the loan, and it would include the SBA guarantee fee, closing costs, working capital, etc., 1.27 million. The SBA does require 10% down, so your total bank loan would be $1.143 million. Now, right now, there are some additional incentives from the SBA that can help, when looking to get a loan. First and foremost, they are waiving their guarantee fee, which actually can save thousands of dollars when it comes to getting these loans. They are making the first 3 months of interest and principal payments on the loans. Now, these things are available, as the SBA has put it. until the funds run out. Originally, it was supposed to run through the end of September, but they have put, a little bit more of a clock on these things and said, if the funds for these programs run out, they will stop sooner. However, that just, if you're looking at a practice and it's something that, you want to jump on and take advantage of these incentives, just, wanted to make the timeline available to you. They're also guaranteeing loans up to 90%. And what that means is that they're backing them for the bank up to 90% of the loan. What that means for you is just that lenders will be more enticed to give out these loans and loan you money because they have such a high guarantee from the SBA. Now, breaking this down. Oh, was there a question
for you, Ashley?
Yeah.
Sorry. These guidelines for the loans and then also the practice valuation guidelines, are those applied also if it's a loan just for expansion, or is it only when it's acquisition? Can you speak to that briefly?
Great question. So yeah, when it's an acquisition or a startup or something like that, it does require the 10% cash injection, and all those other terms would be the same. If it is an expansion, there's actually no cash injection required. So if you are expanding on your business, and there are some requirements that it has to meet to be considered an expansion, it has to be, in the same realm. So you can go, like, even if you wanted to add, say, a kennel onto your vet practice and start, an offshoot of your business, or add an additional vet practice, those would qualify as an expansion. But if you wanted to add an ice cream shop, that we couldn't, that wouldn't qualify as an expansion. But if it's in the same type of business, then yeah, that actually would require zero money down. Does that answer the question?
Absolutely. Thank you.
Awesome. Okay. All right. So to break this down a little bit further, and we'll actually get into some additional types of loans here too, which I think will be helpful. So if you're just purchasing this practice that we're talking about, in this example, we're looking at a 6.5% interest rate on a 10-year term. Interest rates actually are at pretty low right now. We're looking in the fours at this current time. So just keep that in the back of your mind as well. But for this example, it's 6.5% interest rate. And you can see, with the monthly payment, yearly payment, and everything else, bringing in, taking into account your salary, owner's income, $157,000. So it definitely can make a big difference in that just even initial first year income when purchasing a practice. Now, when it's just practice purchases, that term is 10 years. So when there's no real estate involved, the SBA provides loans for a 10-year term. If you add in real estate, that actually can go up. That term can actually lengthen up to 25 years. So if the majority of your purchase, 51% or higher, is real estate, the term can be spread out over 25 years. If it's a lower percentage, say, the majority of your purchase is a practice and then you add in some real estate, it'll be what's known as a blended term. So it can extend that term out even further. And so, for the same practice purchase, if you're purchasing the real estate as well, the monthly payment doesn't go up much at all, but you get that land as well. And what's interesting is you can actually add a lease payment to the owner for the purchase of that practice, and your overall income as the owner can be even higher. So spreading out those terms, it can help with that cash flow a lot, that real estate purchase. So if there is that opportunity, I know it can be scary when looking at those big numbers, jumping up another nearly $500,000 in your loan amount. It can look scary when we get into these big numbers, but with having the ability to lengthen that term, it helps just with overall cash flow. So don't let that overall loan amount, if the other things such as the cash injection and everything are in place, don't let that deter you from purchasing that real estate. So some acquisition do's and don'ts. Really understanding your business and what makes you different is super important. So you want to know why your business can stand out from others and really focus in on that. Current cash flow opportunities, what's bringing in money into your business. And as we mentioned before, leveraging the experts within this industry, it's, focusing your energy on what you have to do and what you know how to do, and letting the experts help you and guide you where you need. Lending and things like that, and going through financing, it can seem daunting and it can seem difficult and it can seem confusing. But if you lean on our team, lean on the experts, we can definitely help you. Expect the unexpected. So, things will pop up. We've seen it time and time again where, you're halfway through the whole process of purchasing a business and you learn something brand new that can completely derail it. Maybe it's on a floodplain and you didn't know that. Maybe it's whatever the case is, expect the unexpected to pop up. And again, don't get emotional and prepare for that. And then forecast your future performance. So make sure that you know where you can take this practice and have that build out so that, maybe when you purchase it, it's not exactly where you would like it to be, but you can get it there and have built out your plan to take it to where you want to. Don't. So we want you to see the potential in this business, but we don't want you to pay for it. You don't want to pay for essentially your hard work. So, some things that we see in purchases that can cause, issues with cash flow or to make it appear not as healthy as it could be is, overstaffing. They're bringing in $1 million, but have 4 DVMs on staff. So, just overstaffing and spending money on wages they don't need to. High cost of goods, having extra inventory on the shelf that doesn't need to be there. So we want you to see that potential in this business, but we definitely don't want you to pay for it, because that's going to be your work to fix it. And, don't want to add that to the price tag. And then don't assume that bad trends are easily fixed. If it's something that might not be as controllable as, the staffing situation or something like that we talked about. A lot of things are fixable, but some of them are more difficult than others. And then as we talked about before with the corporations, don't get into a bidding war. It can be very, they'll outbid you every time. But again, there are a lot of practices out there. We are seeing a shift in the climate, and hopefully, the practice that you want, you won't be put into that situation. And then also, when you're purchasing a practice, don't accept poor or outdated financials. You want to see the financial health of the business. You want to make sure that you have all the information that you need to make the most informed decision possible. So you want to have that full financial picture and all of those pieces that we discussed earlier. So why First Financial Bank? So we are a national preferred SBA lender, which means we can lend all across the country. And being a preferred SBA lender, we can actually shorten the process and get it through a little bit easier for you. So we don't have to send out anything to the SBA for approval. We can approve in-house, which means that from the time your loan is approved to the time of closing is typically between 60 to 75 days. So we can make it a faster, more seamless process for you. Our team was actually built by a DVM. This whole division was started by a DVM in El Dorado. And now it's built on people who have worked in veterinary, the veterinary space, or have built businesses themselves. So they understand what it takes to get you from point A to point B. We really want to work with you and get you where you want to go as far as practice ownership. And we will build products that match your business. We don't expect you to, our shoe to fit. We'll help to build a product that fits you and your needs. And then we also want to provide you the same one-on-one experience that you want to provide to your clients. When you call us, you're not going to get a 1-800 number that you have to go from robot to robot to robot to finally maybe in 40 minutes reach a person. Swanda and myself, we actually service all of our loans even after closing. So you will always be just one call away when you have questions or concerns or need help. We will always be here to, assist. You'll always be able to reach a person. So, when it comes to a purchase like this, when it's so life altering and such a big deal, we want to make sure that we're here to help you in any way possible. So you can rest assured that we stand by that and we'll be here for you. And what we do, we can help you with acquisitions, partner buyouts, startups, or even if you just need some working capital to remodel your space, whatever the case may be, we can help with loans up to $5 million. So if there's a project that you have in mind and you're not sure if what the possibilities are, please by all means reach out to us. We're here to help, and we definitely, if there's a way to get it done, we're here to help you. All right, so this is our team, and I want to thank you so much for attending the webinar, and I am here to take any questions that you guys have.
Thank you, Ashlee. While we're giving everyone a minute to ask any questions they might have, I wanted to say, for those that are attending today that are VisiSites clients, that one-on-one experience that Ashlee was talking about is why we partnered with First Financial Bank. So like I said, if you're a client of ours, you know your account manager by name, you likely know multiple people on our team by name, and you have a phone number you can call to reach someone, within a few minutes, just like she mentioned. And that's a very similar experience with First Financial, which is why we trust them to talk to our clients as well. But we do have a question that just came in. That is, how much is typically required as a down payment for an acquisition loan?
That really depends on how much the cost of the practice. So the cash injection requirement is 10%. And that can actually be split between the buyer and the seller. So if the buyer puts in 5%, the seller is able to assist with 5% as well. And it's put on what is known as seller standby. So just there until the end of the loan. So overall, the cash injection requirement for an acquisition is 10%, unless it is an expansion of the current business. So for example, if it was a $1 million purchase, it would be $100,000.
Perfect, thank you. And also for those of you that are here, I'll keep giving it a few more minutes for questions. I'm also going to launch a quick poll because we're doing more of these. As I mentioned at the beginning, if you were here with us right when we kicked off, we're planning to do these quarterly, potentially more often if it continues to go well. So we want to hear from you guys about what else you would like to hear about. Ashlee's got all kinds of great topics she can talk about as well. So if there's other financial areas that you want to learn more specifics about similar to today, please feel free to throw those in the chat. But otherwise, I'm also going to launch that poll as well. If y'all that are here would not mind answering that before you take off today. We do have another question as well. Are there any situations where an SBA loan wouldn't make the most sense?
There definitely are. There's also conventional products out there. Typically, we work primarily with SBA loans, but if there was a situation where somebody potentially had, other collateral in mind, or, high cash injection options, or whatever the case is. There are some situations where it wouldn't, we could look at a conventional product. But a lot of times when it comes to, the veterinary space, the SBA loans do make a lot of sense, especially when we're looking at, a first purchase of a practice or a startup or something like that.
All right, thank you guys for answering.
And that would definitely
Yeah.
be handled on like a case by case basis, for sure. So if anybody has, any questions, or would, has a project in mind, definitely feel free to reach out to us. We can help you, work through that.
Perfect. Thank you, Ashlee. So for those of you that are mulling all over all the information that she went over and have more questions that pop up as you go throughout the day, please definitely reach out to them. I've worked with Ashlee and Shwanda and Amber in varying degrees for a while now, and they're all great and speedy about answering questions. So I know they'll be happy to help you.
Absolutely.
And of course, I think we also have some attendees here today who are from the First Financial side. So if you have questions about busy sites, please feel free to reach out to us as well, either myself or Danny. I think for all four of us here today, you can find us on LinkedIn as well. We're all pretty active on there too. If that's your land that you prefer, you can find us there as well. But otherwise, if we don't have any other questions, I'm going to go ahead and stop our recording here. Thank you everyone for attending today.